Good morning, traders and investors. Roger Scott here, Senior Strategist for Wealth Press. Today is Wednesday. It's June 14th. June is almost halfway behind us. It's hotter than heck here in Florida. I mean, I went outside yesterday. It was like an oven yesterday. It was in the 90s. It's about 7:51. I'm here nice and early. The market's not going to gear up to open for another hour and 40 minutes or so. Actually, let's see here. Yeah, about an hour and 38 minutes to be specific with you. Now, as you can see here, pre-opening, the Nasdaq is up about 20 points. Not really anything crazy, pretty random, and the Dow's down 67 points. And today's going to be a very, very interesting day in the market. First of all, you've got the PPI following yesterday's CPI, that's Producers Price Index. And second of all, you've got Mr. Squirrely Powell. Don't get me started on him with the FOMC announcement. I believe the minutes a lot more than the announcement. The biggest factor today is going to be the language that he uses. Is he going to be talking about a pause in interest rates, how things are not getting any better, how things are slowing down, or is he going to be trying to spin it and tell you guys that the game is over, that they're going to be lowering rates? If he's going to be telling you that we're going to be lowering rates, then he's just a bald-faced liar. That's just not the case. But what I think he's going to do, I think he's going to play it down because the market's been really overheating lately and not for the right reasons. And they don't want a major volatility. Volatility is not good. A major shakeout's not good for anybody. So what I believe the Fed is going to do is going to play up the fact that it is a pause, that it's just a wait and see, that interest rates are going to go higher, that we're not in a deflationary market. And I think that's going to cause the market to deflate a little bit. I think that's, and to be quite honest with you, the market really, really needs it right now. This is the equal weighted S&P 500. This is not, here's the regular S&P. Let me just show you here. This is the SPY. Just to give you some perspective. This is the SPY. Look how it's breaking out. Let's look at it over 1 year. That's a 1 year SPY. And this is the equal weighted 1 year SPY. So here you're looking at the SPY, and here's the equal weighted SPY. If you look at this chart, this looks like a downward channel that's about to go higher with a really, really high RSI right here that hasn't been here since almost a year, since right here, or right here, or right here. The bottom line is every time you see these peaks, it tends to go down. And let's see, is this the 2-day? No, that's the 5-day. That's pretty good. So the point is, it's really overbought, and it doesn't look anything like the regular SPY. The SPY looks like it's breaking out, and it looks like it may be going up all the way to 460 or 4,600 if you look at the SPX. But if you look at the equal weighted SPY, it looks like it's just in the middle of a channel downtrend, and this thing needs to cool off. So don't get so overwhelmed over this rally in technology, and I'll talk about that in a minute too, because I believe this rally in technology is not going to last, and we're going to go back down. I do not, for the record, I do not believe by any stretch of the imagination we're in a new bull market, and I'll explain to you why. Before I get into the PPI, also, just so you know, today, Wednesday, we have Lenner, LEN. It's a stock. It's a real estate stock. It's been doing really well. The implied volatility, if you take the add the money price, they're expecting the price after the earnings announcement to go no more than 4.7% up or down. And tomorrow you've got Adobe, and they're not expecting anything beyond 7.4%, and then Kroger on Thursday, and there's nothing on Friday. But I wanted to bring this to your attention. There was nothing yesterday, but today we have Leonard Holmes. Not sure if it's coming out before the open or after the close, but keep your eye on that. If you believe this is going to be a big move over 5%, you may want to buy the option. And if you think the move is going to be small, below 4.7%, you may want to sell the option. Just giving you some perspective. The PPI that's expecting to come out today, we're looking at 2.9%. I believe since the CPI came out okay and the expectations are not that great, the PPI will also come in on mark. So I'm looking at anything below 3.2 so the Fed can say, yes, it is moving in the right direction. We're only looking from a year ago. I couldn't care less what it is from a month ago. And year over year, the hard number is 1.6. Honestly, anything 2.1 is fine. Anything below 2.3 is fine, and here anything below 3.2 is fine. These numbers are just consensus, but notice the range is below. 2.1 is below 2.3, and 3.1 is below 3.2. So anything below these numbers will give the Fed a feeling, or they could say without cringing, that things are getting better, just like they were for the CPI yesterday. I'll show you the headline numbers right now. You could see here 5.3, 5.5 last year. They got 5.3. They expected 5.3. The market behaved very, very normally. So again, I believe that we're going to beat the expectations, but I think the Fed is going to play things down because the market's been acting really, really well. So I think they're going to play it down and say, and be honest for once, because they don't really need to rally this market. They actually need this market to calm down, especially technology. So if you guys think that this is not a pause, that this is a beginning of the end of interest rates going higher, let me sell you a bridge. So let's talk about the news. And then remember, Wednesday, I'll give you my number one stock pick to the long side, short side, but I want to do some analysis before then. So market participants brace for Federal Reserve interest rate decision while also waiting crucial PPI data. We just talked about that. Tuesday session, S&P climbed to a 13.5-month high. Not the equal weighted one, not this one. Sorry, but I couldn't stop. Blue chip, the Dow Jones rose to a 4-month high, and the tech-heavy Nasdaq 14-month high. No, folks, it's an aberration. It's like literally 6 stocks causing all of this. Basic material stocks led the gains in the broader market, driven by rising commodity prices on optimism over demand after China's central banks lowered its short-term lending rate for the first time in 10 months. China is in a bad place, and we really need them, and they really need us. So the more cooperation we can get and the better their economy looks, the better things will look here. Also, China has a major impact on gambling stocks. I don't know if you've noticed or not, but when things get better with China, Win, Sands, all those stocks, they rally as well. Semiconductors advanced. I'm going to be talking about them in a few minutes, with NVIDIA and NXP rising more than 3%. On the bearish side, Biogen, I told you guys to short that stock yesterday, slid more than, it was one of the stocks that I featured in my VIP room. If you're not there, check it out. And remember, like these videos, subscribe to this channel, and post comments and visit my VIP room. It slid more than 2% and was amongst the top percentage losers on the S&P 500, following a report that Biogen and SI's Alzheimer's treatment may not be seen used widely in Europe. That's really big. Core CPI, which came out yesterday, rose 5.3%, lower than 5.5, and I'm hoping the PPI will do the same today. Today, all eyes are focused on the monetary policy, where Mr. Jerome Powell will lie to you in front of millions of people watching the show and tell you how great things are. No, I'm just being sarcastic. I'm hoping he's going to be straight because the markets have been strong. He has no reason to lie. But I hope he doesn't try to spin it and say things are really great and we're going to start lowering interest rates and the economy's great, because it's not. It's not. U.S. futures are pricing in a 95% chance that the Fed will keep its Fed fund rate unchanged, and I think they will, and therefore it shouldn't have much of an impact. His speech will have a bigger impact. Also, investors will be paying close attention to post-decision press conference by Squirrely and his gang of conspirators, and that's going to be happening at 2 to 2:30 today Eastern Time. In Europe, they're adopting cautious stance ahead of the U.S. Federal Reserve's interest rate decisions, although it's pretty much baked in at 95%. Strength in mining commodities, and automobile stocks is lending support to the overall market. We're going to have to keep an eye on that in the U.S. In China, they closed slightly lower as investors anticipate further rate cuts and policy stimulus, God, they need it, to bolster the country's economic recovery. Meanwhile, Reuters poll says the People's Bank of China is widely expected to cut the borrowing cost of medium-term policy loans for the first time in 10 months on Thursday. That's tomorrow. Well, actually, they're ahead of us, so that's later tonight. Japan, higher again. Fresh 33-year high following an upbeat session on Wall Street amid bets for a pause in interest rate hikes from the Federal Reserve. Yeah, I don't think they're going to be, I wouldn't be holding my breath. They're going to be pausing for very long. And PayPal got upgraded. CrowdStrike got upgraded. And Catalent, which is one of my crappiest stocks and the ones I've been telling people to sell for about a year now, dropped. So CrowdStrike good, PayPal good, Catalent bad, and Leonard Holmes has earnings. Now, I want to show you guys something. This is semiconductors. You're looking at semiconductors over a 5-year. They're making a swing high right now. Now, folks, I don't know about you, but you heard that economy's not that strong right now. Look at how overbought this is. And I think this rally is going to come back down. It's not going to be strong. Also, Apple made a swing high yesterday, and it made almost an all-time high. You notice a little resemblance here between Apple and semiconductors. This is because of the AI frenzy. Folks, AI is not going anywhere for a long, long time. So be very, very cautious. Also, Look at the momentum, the number of stocks in the infotech sector above the 200-day moving average. This is the 200-day moving average. This is going back to February 2015, 7 years. Look at where we're at right now. Now, look at the 50-day moving average. It's not just the 200. Look at the 50-day moving average. We are as overbought can humanly be. Now look at the 20-day moving average, the short term. Really overbought. I mean, really, really, really overbought. Like, we're as overbought as overbought can be. So I'm not expecting this rally to continue. Matter of fact, if you look at infotech, 89%. If you look at communication services, 88%. If you look at consumer discretionary, 85%. I mean, look at these. They're going back up to nosebleed levels. They can't sustain these levels very much longer. And I'm not expecting a major breakout in the markets on anything right now. I think the SPY, if you look at it, if you take out those major like Nvidia and all those stocks, this is what the market's looking right now. And I think it's going to revert lower, and we're going to lose this momentum that we're seeing right now. The bond market is choppy, but if the Fed doesn't take any action, I think they're going to actually rally the bond market for the short time being, unless the Fed statement is really, really negative. But keep an eye on that. So things are just not looking all that great. Telecommunication service sector, look at this thing. So all the tech stocks are really, really overbought at historic levels. Meanwhile, consumer staples is starting to move higher, something to pay attention to. Meanwhile, you've got other stocks like healthcare that are starting to move higher. So consumer staples and healthcare look like they're about to start coming up, while these stocks look like they are about to start going down. Now, before I conclude, today is Wednesday, and I show you my actionable trades. I show you my favorite trade ideas for the week, long and short. So let's do that right now. So we don't want to be in technology right now. No matter how great it looks, we don't want to be in technology. One of the stocks that I wouldn't mind being in right now would probably be either Wynn or Las Vegas Sands, because it looks like things are getting a little bit better in China. And notice they're doing exactly the same thing. I like those stocks a lot right now. I also really like Lamb Weston. LW, if I had to pick right now, I would pick this one. It's approaching here, LW. It's approaching a flat top breakout, and I like the stock. I like the levels that it's at. I like everything about this stock, and I think we're going to see higher prices on this stock. So not technology right now. LW is a good stock. That's a great stock right now. Let's see here. As I mentioned, GE, I mentioned that to you yesterday. Great stock right now. There's some good ones out there, but stay away from technology. They can drop on a dime really, really fast. And CPRT I really like right now. Really like this stock. Stay away from tech stocks. Wait till things cool off a little bit. Wait till they have a correction, and then we'll see where we stand. So those are my strongest picks. Weakest picks, that should be very, very easy. VFC, definitely VFC. AAP, I think this is going to come right back down. Where's this? And TSN, Tyson Foods. Those three stocks are good to go. They are good to go. So you've got AAP, VFC, CTLT. Here's Catalent. I think it's going to be dropping. They were downgraded already. Don't think there's going to be a lot more upside there. And Tyson Foods. You've got plenty of things to keep you busy today. Be careful. Be really, really careful. I'm getting very nervous about technology. Now, before I let you go, I want to remind you, like this channel, YouTube Wealth Press channel, subscribe to this channel, get your goodies. I post and subscribe to my Telegram channel. Go to rogerscott.com/Telegram. All the instructions are there. You get free trade picks, pictures of my cats and dogs. You'll be the first to get my video notifications and any updates I may have, and it doesn't cost anything, and it's international. Now, before I let you go, folks, Chuck Hughes and I, we went head-to-head with Wall Street. We did, exposing one of its best-kept secrets, one that's been hidden for ages. According to his latest backtest, it's already shown the power to pay out 28%, 41%, even 83%. Not in a year, not in a month, not even in a week. I'm talking overnight. Holy moly. That's because billions of dollars are flooding in and out of stocks every single day. And when the fraction of that money hits one stock, ba-boom! Yes, ba-boom! Just follow the link below and we'll tell you all about it. Follow the link below this video or go to the YouTube Wealth Press channel and you'll see it below the video with other links and goodies there. Have a great day. Questions, comments, anything about Squirrely Powell you want to tell me? I'm all ears. Support@marketgeeks.com. Have a great day, and I'll see you after the announcement. Bye.